Hi, this is PR Sundar. Welcome to pre-market report sponsored by Delta.exchange. Apologies, so there was some technical snag while doing the live, so therefore I'm just recording it. US markets, US futures are lower, probably because of some Middle East tension. Asian markets are also not doing well. Asian markets are mostly negative bias trading. This is despite China cutting the lending rates. So usually when there is a rate cut, the market should do well. But Chinese markets are okay, but other markets are not doing well. And GIFT Nifty indicating about 10-20 point lower opening. So for the past few days, we have not been following the global cues. And I'm sure today also we are not going to follow the global cues. So yesterday, most of the markets were down, but we hit all-time high, and that too comfortably taken the all-time high. But however, the last 1 hour selling mainly in HDFC Bank. So HDFC Bank analyst meet was going on yesterday until our market close, and then the report came only after the market close. But the report doesn't seems to be good. I think the analysts were not really very happy with the set of numbers provided by HDFC Bank. So their net interest margin is going down, their cost of deposit is going higher, their NPA is increasing in the non-individual segment. So that must be a corporate segment. So etc. etc. And many leading brokerages decided to cut the rates, cut the target. I think many brokerages, they are cutting the target from 1,900 to 2,000 to 1,000. Yeah, I'm a bit confused. Okay, they're cutting down the rates target actually. I think by about 50, 100 rupees or something like that. So anyway, HDFC Bank, ever since this merger started with HDFC, so that is actually creating hell lot of problem, hell lot of volatility. If you can remember, the erstwhile HDFC Limited, it was trading around 2,200, went to 3,000, again came back to 2,200, during the announcement of the merger. So this merger has not really gone very well for HDFC Bank. So this is a lesson for other people. They like things like HDFC Bank, they're too big to fail. So when they fail, that is having a bigger impact in stock market. So if not for HDFC Bank, by this time, the Nifty should have comfortably crossed 23,000. So anyway, so that is how things work. So we cannot do anything. Yesterday, surprisingly, FIAs were net sellers. So they were net sellers for about 750 crore. So you see HDFC Bank closing in red after opening higher. It has fallen 50 rupees, 15 rupees intraday. That shows that, so it's definitely FIA selling in HDFC Bank. So domestic institutions have already pumped in 14,000 crore in the month of January. It looks like they may have to pump in another 14,000 crore in the month of February to stabilize the HDFC Bank alone. So as I said earlier, HDFC Bank is too big to fail. So at any cost, that stock has to be saved from collapsing. So because of that, Nifty took all-time high, next 50 took all-time high, mid-cap took all-time high, but Bank Nifty is far, far, far away from all-time high. So today, just Fin Nifty expiry, I think the markets will be too volatile, mainly because of HDFC Bank. Yesterday, it was ICICI Bank and State Bank of India supported the market, while Kotak Bank, Axis Bank, HDFC Bank all came down. Despite markets are in such a good, I would say, next to euphoric stage. So markets are euphoric, and all the stocks are going higher, but these banking stocks are really drag. So looking at the open interest, I think still people are selling 20,000 put option, hoping that the markets will close above 20,000, but they have two more trading sessions after this, Tuesday, Wednesday, and Thursday. But they are looking very, very bullish. Of course, those who have sold 20,000 put option would have sold 22,400 or 22,300 call option also. So combined premium, they must be having more than 100 rupees in their pocket. So therefore, we would say uh, like 21,900 should be a good support for this market. So global cues are not supporting today, but as I said earlier, for the last many weeks, we have not been following the global cues. So today, the markets will focus on how HDFC Bank is going to react for this analyst meet. So that is going to decide the market direction because it has the highest weightage. And Reliance, we cannot expect Reliance to support the market because Reliance has already run up so much. I just remember seeing around 2,200, 2,300 a few weeks before. Now it is closer to 3,000. So it has already run up, nearly 30%. So with the bank, the Nifty has to sustain above all-time high. Nifty has to sustain above 22,000. HDFC Bank has to support the market. So otherwise, it's going to be very, very difficult. So yesterday, L&T and Coal India fell. I think today there is some news about Coal India. So, but anyway, they are all insignificant news, insignificant contribution to Nifty. So let us hope that 20,000 will be defended today on the lower side. Now clearly on the higher side, so yesterday's high should be taken as a resistance for today's trade. So hope you enjoyed listening to this audio. Thank you for listening.